when you're just looking at this, how can you hate on Alibaba when you're seeing all this amazing growth? And people keep saying it's a value trap, but how can it be this way if you're seeing all of this growth in this company? Where can the value trap be? Hello everyone, welcome to Just Invest Today, and today we are talking about Alibaba's Investor Day. Yes, the future is here. We have a clear idea on where Alibaba is going and why I'm so bullish on Alibaba, man. And this Investor Day provided all the amazing context for my bullish stance. So in today's video, we're going to break it down. We're going to go through some of my highlights for Investors Day. An amazing day because, man, we've been suffering. Alibaba has been down more than 50% from all the delisting fears, the VIE structure fears, the China fears. And sometimes you need a day to just kind of settle us down, focus on the business and what it's doing and what it's going to provide for the Chinese economy. So let's go into the rapid user growth first, man. And before we get into it, guys, can you please like this video, subscribe to my channel? I'm providing you with so much new content every day, every week. So please subscribe to my channel. Help me get to 1,000 subscribers. I will greatly appreciate it. So subscribe, man. Click the button right now, man. So here we go. Rapid user growth. So they have 946 million mobile monthly active users. Up 65 million, man. And people don't understand or not realizing that Alibaba is still growing its users when it's almost reached the peak of almost hitting every Chinese person. Or just think about like Facebook too. Like Facebook is going to be hard to grow users because it already has all the users. That's the same thing we can say for Alibaba. For it to see growth still is amazing. So that's what I'm just trying to say, and that's for all the people saying that Alibaba is under pressure, it's not growing, but we still see new users coming to the platform. That is amazing to know that they're still going forward and they're still growing the company, because active users is important to see more revenue, more eyes on the business. So here's the risk that comes with Alibaba, and we've known these risks and we have to talk about it because they are risks and you have to acknowledge the risk in any investment you make. So a fast changing consumer demands. This is mid to long term. Fast changing consumer demands. And that's what I'm saying about the Chinese economy. It innovates so fast, man. And that's what we got to worry about. Like, we have a lot of these businesses just coming up with new ideas, new things. And we can depend on Alibaba to kind of compete in those sectors because Alibaba has been competing for over 10 years. So we understand that Alibaba can compete with all of these new businesses. So that's what it goes to market competition. The regulatory policies. And this is kind of a hit or miss because sometimes regulatory policies can be actually beneficial to the actual big dog, right? Or sometimes it can be bad for the big dog depending on what angle you're seeing it. So it can limit other like competitors from coming into the market because they know how much regulation is going to be, so they're going to be afraid to come in because they're going to be afraid that more regulation is going to hit them. Or it can be bad because the regulation is just aimed at the big companies and they want to make it more fair. So it's going to actually accelerate new competitors from coming into the market. So it all depends on how you see it. But the short term, global supply chain challenges, that's a short term issue. That can be fixed, man. And that's going to be fixed. Those supply chain issues never last. Pandemic, yes, the pandemic consumption is growing, but we know that's going to end soon. But even though there's more variants, that's going to be a short term problem, hopefully. So we can kind of leave that alone. Opportunities by consumer segment. So we're seeing 90% penetration, and that's what the main topic has to be right now. Is that as you see China grow, Alibaba inevitably is going to grow because they have 90%, with 90% retention of these users. So that's what I'm saying, is that we saw the actual Chinese economy slow down, especially during the pandemic, because China is super strict on regulations when it comes to like all of that. So we saw it slow down, and now the economy opened up. The government, when I say opened up, I mean the government is actually lowering the limits on the banks. Now the banks are going to be able to actually lend out more money. So that's going to improve consumer spending because they have more money to lend out. We see young consumers growing 3x crazy high purchasing power, quality of buying more luxury goods, new launches, premium stuff. And this is amazing because we want a fast growing company with a lot of innovation because we have to keep up with the competitors. They're projecting 100 million paid members soon. So that's how I'm seeing. And when you see all these active customers growing, the business has to grow with it. And that's how we know Alibaba is projecting at least 20% revenue growth for the future. And that's going to translate into the bottom line because they're giving you all this value propositions on what they're doing, the product lines they're coming up with, how they're improving their actual app and what they're looking for. They're making 3D rooms, they're making it more live entertainment, they're making the marketplace bigger. They're doing all of that. So all this innovation is going to keep up with all the competitors. And that's what we can really rely on when it comes to Alibaba. They're going to provide that long-term value creation for consumers. And that's super key. As long as there's more value for the consumers, they're going to keep coming to the app. And that's what we want. People to keep coming to the app as almost a one-stop shop, as they can use Alipay, they can get expensive products, they can get cheap products, they can get products really, really cheap. And that's what they're providing with also fast delivery and entertainment. So that's the value proposition. That's what we can see for the China retail marketplace as it's growing its users, it's growing the atmosphere, the experience. So now we're gonna move on, man, and this is what I really enjoy, man. And they are giving you the lowdown. They're giving you exactly what they're doing, and this is really how they're gonna grow their consumers. Taobao deals, rapid consumers and order growth. This is one of their main growth activities. Reaching into those tier cities that are not getting a lot of attention, not getting a lot of customers. People that don't have a lot of income. The lower tier cities, that's what they're going to reach into. And that's what they're seeing growth in. Because they're going to have to compete with PDD. And I think that PDD has that market leadership already, but they ain't generating the money that Alibaba is going to be generating with Taobao deals. They just have a bigger economy of companies that they can actually attach these deals to. So honestly, this is their biggest growth factor, man. Total order growth 290%, man. 240 annual active customers. And this is what we're going to see. And they're going to be doing deals, and they're going to actually make sure there's faster delivery. And that's the core concept, because when you think about these deals, Taobao deals, and you actually buying those cheaper goods, it's manufacturer to consumer, regional distribution center with community pickup point. And that's what we're seeing. And that's how they're able to provide these cheap products for all these consumers. Same way PDD does it, but I think Alibaba is going to actually provide better delivery, like a better experience when it comes to this, because they just have more money. They have the better economy. And this is what's going to increase the buying power, the profitability of Alibaba pretty much. So this is what we're going to see in the future of Alibaba. Taobao deals actually making the forefront of Alibaba. I think it might even get just as big as their main platform of Tmall and Taobao. So who knows, but that's what we're seeing. Then they're moving on to Sun Art, which is actually a nice retail synergy, which they can actually get the procurement and supply chain from Taobao deals into Sun Art. And they can go into stores providing that real experience, man. So that's what we're seeing from there. This is not even the biggest thing. This is one of the biggest things. But then we gotta move on to the international business, Lazada. And this is where you're going to see huge growth. This is where Alibaba keeps talking about investing in new initiatives, new companies, new markets, and giving you a better value proposition. Lazada might become one of the biggest e-commerce companies, maybe behind C. But even if it's behind C, it doesn't matter. You can still have two e-commerce players. It's not always have to be one beats everything else. You can still make money being the second fiddle if it doesn't pass C. But people are saying it's not going to pass C. Who knows? But Lazada is still there. Look what's the top 20 by monthly active users. Look where Lazada is. That's not bad, man. It's not bad. It's ahead of Marco Libre, which is pretty surprising, seventh globally. So when you think about Lazada, you can't say it's not doing good, it's not gonna make money in the future because people are undermining it because it's not making money now. But when you see the compounded annual growth rate of 27%, how can you tell me that this is not a market that is going to be very profitable for Alibaba? And remember that most of their money is made from the domestic consumption. Going into new markets, which is going to provide them with amazing rapid growth, new opportunities. And that's what they're seeing, and this is what they're literally showing you, man. Monthly selling sellers, large expanding buyer base, monthly active users, monthly active selling SKUs, they're all up. They're all up 2x, 1x, 60%, 21 billion GMV. Like all of that is growing, and their value proposition for Lazada is growing too. They're doing live streaming, engaging users. They're they're getting more brands on the platform. That's the key concept to Alibaba. Is just expanding the ecosystem. So that's what they're doing, man. The Lazada Mall, the online destination for all brands. So when you're just looking at this, how can you hate on Alibaba when you're seeing all this amazing growth? And people keep saying it's a value trap, but how can it be this way if you're seeing all of this growth in this company? Where can the value trap be? Value traps are companies that are providing amazing they're not providing a lot of upside. They're cheap, but they're not growing. And that's what you call a value trap. How can a company be growing revenue 20%, bottom line 20%, and be a value trap with businesses that are not making money now that are going to make money in the future as they see more growth and they get more of the economy? How can that be a value trap? That's why it doesn't make sense when people give me that argument. So man, this was an amazing Investors Day. Tell me what you think about this, man. Guys, if you like this video, can you please like it, subscribe to my channel, get back to you in the next video. Peace.